Hello investors, today's Wednesday, May 18th, 2016. I'm Grant, this is Gary. Adam Carlini is our third partner and we are Dynamic Wealth Management. We're basketball fans, so we've really been enjoying the Western and Eastern Conference Finals, watching NBA games, having a good time. Now as far as the stock market goes, it has been a little bit of a bumpy ride so far with some of the announcements that have come out from the Fed, and a lot of our clients has actually been leaving town this month.
That's correct. Summer is upon us, so we want to wish those that are traveling to graduations, summer vacations, a lot of clients that are going back home, Midwest, up north. We wish them safe travels, and we'll look forward to seeing them when the summer's through. We will brave the heat here in Arizona, sticking around. But a lot of information to go through. Actually, a big announcement that moved the markets today that we want to share with you. So let's go ahead and jump into things. Okay, good to be with you folks on this May 18th. Let's give you some information. First of all, as far as upcoming events, because we are in the summer months and most of our clients, or many of our clients, are out of town, as we alluded to in the opening, we are taking a break for the next few months as far as any major events that we have. But even so, we're still here in the office and putting a lot of stuff together over the summer that we're excited about and hope to present in the months to come. But we are definitely still meeting with clients and prospective clients. So if you'd like to find out more information about who we are, what we do, obviously give us a call, 623-466-6060. Let's go and talk about our risk indicator. So we have been here for a few different months, not moving forward into the green and really not moving back, as we'll see in the charts. So we're still slightly in the green bullish zone as far as our main trend model. Now, this does not take into account some of the other models that we run, which we hope to give you more information in the weeks and months to come on those other models. But this is just our trend model here. Let's talk about what came out today. It actually shook up the markets a little bit. This is an article that came out from MarketWatch. And basically it says Fed open to hiking interest rates in June. So what happened was at 2 o'clock Eastern time, the April 26th Fed meeting minutes were released. And I think the markets were a little bit surprised in that basically, as it says here, it appears that many of the Federal Reserve members basically are indicating that they're ready to lift interest rates even in June if the economy continues to show life. And so you can take a look at the article, but a number of different places that are reporting that. And furthermore, what they did indicate also in that article, it says here, quote, some Fed officials said financial markets might not be expecting a rate hike in June and emphasized the importance of communicating clearly. And that's our take as well. I think the markets are not expecting that necessarily. And so we'll talk about the implications and what happened in the market. But this is a chart that came out in that same article, kind of showing the idea that here's the anticipated stock market view of what should happen with short-term rates in the next 1, 2, 3 years. And this is kind of what the Fed is indicating that they expect to do. So we definitely see a little bit of a divergence, and the market is not necessarily believing or has not maybe priced in. So we'll have to see what happens with some follow-through. Obviously, always a lot of volatility when these announcements come out. But so the next time the Fed meets will be the middle of June. But they also indicated in that article that Janet Yellen will actually be speaking at least a couple times prior to that, and obviously that could be market moving. So everybody watching to see what the Fed is going to do. So what did the market do in reaction to that? So here's the short-term treasuries, the 5-year treasuries. So notice that announcement came out at 11 o'clock Arizona time, 2 o'clock Eastern. And as you can see, short-term treasuries basically shot up based on that news with the anticipation that short-term rates could go higher. Obviously, that would affect short-term notes and bonds as well. How about the stock market, on the other hand? So this is the S&P 500. Again, close to that same time frame, 2 o'clock, and the opposite effect. Market went down. The good news is it finally did settle down, so that's about a 1 1/4 drop, pretty darn quick, within about 30-minute time frame. but then the market picked back up, and I think it actually ended just slightly positive. So we'll have to see where the follow-through comes in the next few days on this. How about some other markets or asset classes? Well, as you can imagine, interest rates going up, we have the linkage then that would strengthen the U.S. dollar. And so we're going to compare the U.S. dollar to gold and oil, to obviously commodities. And as you can imagine, as U.S. dollar went up, that pressured gold and pressured oil as well to go the other way. Obviously, a lot of commodities heavily denominated in U.S. dollars. And so really an inverse relationship, as you can see there. So obviously, as those minutes came out, a lot of people watching them, looking for indications as to what the Fed might do in the future, and specifically at the next meeting. This is something that comes off the CME website. It's their Fed Watch tool. And so, as you can see, this has increased. I don't know if, to remind you, last time we reported, which is about a week and a half, 2 weeks ago, this was at a 9% probability of a rate increase. It's now at a 34% rate increase. And basically, on this same tool, they report that in this year, 2016, there's about an 80% now chance that rates will go up at some point in time. So the markets are now starting to price in the fact that rates could potentially be going up throughout the remainder of the year, which has been a change. The Fed also indicating that the economy probably getting stronger and maybe bouncing a little bit from the very weak and sluggish growth we had in the first quarter. I'll go ahead and turn over the time to Grant. He'll give you some more information and more charts as far as the stock market is concerned.
All right. Well, Gary did a good job walking us through the economy and what's going on out there. Let's jump into what's happening in the stock market, and I'm going to make this quick because we are committed to not wasting your time and dragging out these videos. So we'll make sure to get you the information as quickly and effectively as we can. So here's the S&P 500. Now, you'll notice we've been in this channel, down on hitting these bottoms, up to the top again, down low, and back up. So, but if you look, here's a little pattern here that we call a head and shoulders. So there's a little shoulder here, a head, and another shoulder here. Usually when you see that pattern, it's not good. But there's conflicting information out there right now. So there's support, right? So we know that it came here, bounced, came here, bounced, came here. So there's these 4 points where it has support here, but in general, that's not a good sign. But we'll walk you through a couple things that will show you the other side of it as well. Here's the S&P 500, and here's kind of what I was talking as far as positive indicators go. A few indicators here: relative strength, stochastics, and the commodity channel index. Look at them; they're all near the bottom. Now, when we see any of these near the bottom, that generally gives us a good sign that at least in the short term, it's a good buying opportunity. So it's comforting to see all these down here because that gives us some indication that there might be room for a little bit of growth here in the market. Now, since foreign countries, many of them have stopped their stimulus packages, the dollar has gone down, and that has really pushed oil up. So that's good. In general, when you see oil going up, we'll see oil and we'll see stocks tend to move in the same direction. As the dollar goes down, that is a good thing for most large cap stocks, which is what the S&P 500 is made of. So in general, that's another good thing, another good sign. Here's the month of May. We just want to show you where the money has been flowing, at least in the month of May. So it's been flowing away from stocks. So right here we have U.S. stocks down 1.5, international developed stocks down 3, international emerging market stocks down 5.2. Right. Well, what's up? Well, a couple of things are up here. Real estate is pretty much flat for the REITs. And after today, that's going to be even worse because the REITs really had a bad day today after the Fed announcement. High yield bonds flat, commodities up. Right, and that's because the dollar's been coming down. Gold kind of flat, short-term treasuries flat, long-term treasuries up. So, interestingly enough, May so far has been a risk-off month. People have not liked the risk, and they've liked treasuries and commodities here with the dollar headed down. Okay, let's talk about our allocations. Where are we invested for our clients right now in the ETF trend following model? Well, we are still in the green zone. So you'll see as long as we're above this yellow line, we're in the green zone. And the yellow line, what distance do we have to fall here? Well, it's about 1.5%. So if we get another 1.5% drop, we're going to start getting a little bit defensive again. Here is what the growth allocations look like, right? So, so the green allocation actually, sorry. So the green allocation is where we are now. So if you're a growth client, then you are 100% in our risk assets here. And if you're a moderate client, you're 80-20, 80% equities and stocks and ETFs, and about 20% defensive, right, which would be bonds and treasuries. Conservative, you'd be a 60-40 here. So, and we've been that way for a good while now. So we would love to see the stock market stop falling here, turn, and give us a little bit of a run. So we are watching it carefully, and obviously we have a plan. We know what we're going to do if the stock market goes up, if the stock market goes down, or if it goes sideways. We have a plan, and we are going to stick to our plan and make sure our clients are on the right side of the market. Okay, here's our disclosures. We just want everyone to know that we are not making any specific recommendations for you. We are just talking about where the stock market is and trying to give you a picture of where the stock market and the economy are currently. You should not buy or sell any securities or products without consulting your financial advisor. That being said, thank you so much for watching our video, and we will put out another video soon. Have a good couple weeks here.